Hello, everyone. Welcome to Smart Investing. Today is September 17th, 11:34 p.m. here in Florida on the East Coast. And today we're going to be talking about the special dividend paying companies. So, before I begin, I just want to say that I'm not licensed or insured. So, if you're going to invest in the stock market, please consult a licensed and insured advisor. So let's begin. So this is the first video for September, the official one. I know in my last video for the special dividends, I mentioned a few that were in September. I can't remember if any of these stocks were in there, but again, we're already 2 weeks in, a little over 2 weeks in. So today's the 17th, so I'm covering at least the first 2 weeks of September. So then I have one more video after this for the end of the month after September ends. So this is video number 1 of 2 for September. So again, in 2 weeks after September ends, that's when I'll do the second video, and then we'll see how many we have. I don't know. I don't know how many stocks I'm gonna have, but I'll put them up when I get a chance, and we'll go through the whole process over like I always do. So the first stock up that I have is CBIO. We're gonna look at the special dividend history real quick. I don't think I'll look over too much of the financials and the technical analysis and the quants as well. All those three factors will be for other videos, such as the sector videos that I do. So we're gonna save that info for those type of videos. So I could just go over for a quick overview. So right away, they don't have positive earnings. I'm not too crazy about that. I wish it was positive, but again, it's negative, so that's not a good sign. The share price is really, really low. That's really a bad sign in my book. Even the market cap is really, really low. So right away, even if I didn't look at the chart, uh, still a bad stock right away, right off the bat. So this is for the whole year. So we're looking at the 1 year chart. You can see most of it is down. So even if you bought at the low, I mean, let's say you bought at about let's say 20 cents, you would have to be getting but percentage wise, yes, that's a really nice return. You're getting maybe like at least 1,000% back. But the thing is that that's very, very hard to find, very hard to do. And then also the thing is that percentage wise, yes, it seems high, but in reality, you've only gotten back $1 and change back. So that would have really actually made for a nice return during a very short term cycle, but that would have been ultra risky. It's actually pretty hard to find stocks like these, and then even then, I think after, if I'm not mistaken, I think after 6 months or something like that, if a stock is not over $1, there can be starts of discussions where stocks can actually pretty much get delisted after being so cheap for that long. So it's just a standard rule, in the stock market. So it's happened before. I don't know if the rules have changed, but something along the lines like that. For stock stays under $1 for too long, then it's not really worth it. It can have 2 billion market cap, whatever. Uh, it just proves over time to say that there's just no interest in that stock. Uh, there have been times where instead of it being delisted totally, they do sometimes do where they can apply to like a different index, and that will be more of a private index. Usually they go to the OTC, the over the counter index, and then that's actually even harder. But then if they do make it out alive in that one, they usually stay there, and then they try to come back to the public market. Sometimes companies try and do that, but it's rare. It's rare for them to do that. So yeah, sometimes you'll have companies that are under $1 for a few months, and then they'll shoot right back up over $1 just so they can stay in the public market. Because once you go in a private market, it's very, very difficult. So anyways, let's just go to the dividend history and we'll see that. So as you can see here, the last time I actually even paid out was in 2015, and that was only a 56 cents dividend. And then again, this is the current payment, which was on the 21st. Well, it's going to be paid in a few days. So today's only the 17th, and it'll be paid so 18, 19, 20, 21, 4 days from now. So that will actually mean on Wednesday, this coming up Wednesday. So special dividend payment of $1.43. And that's pretty much it for this stock. The last split that they have was 1 for 15 in 2017. So this stock doesn't do a lot of splits, which is good. And that is a big split though, 1 for 15. But other than that, I don't like the stock. But again, I'm just going over the special dividend because that is the proper information that I have received. So the next stock up that I have is EFSH. So this is like a holding company, I believe. Look at the 1 year. You can see they got a split right there for this year. We're going to see if they did get a split in another time. So I guess that was part of why they got a special dividend, since they knew they were going to split the company. This is already a second split. First split was in 2018. And obviously the current split is in 2022, which was August 3rd. I know this is not a September stock. And also the special dividend stock. But again, that showed up on my radar. And they did make 2 payments so far in 2022. But the very first payment was in December of last year, 2021. So I guess, it is a good thing and a bad thing. So they decided to do a split, and with that came the special dividend. So in order to do that, they split the shares. Yes, the share price goes down, but they can offer more shares, and with that, they might have had stocks on hold. I don't think they're buying back their shares, but since they knew they were going to do that anyway, they might as well pay the special dividend. I guess because the share price went up. So who knows if they wanted to cash out. Let's look at the chart. So I guess they did. So I guess in 2021, they must have had a good year. Let's see here. So from 20, I'm sure a lot of companies had a good amount. So they went from the highest. So in 2020, obviously, was a good year for a bunch of stocks. In 2021 as well. So let's say in 2020 they bought, and then the highest they had was in the low mid 20s actually, so about $24. So now after that little run in September 2020, it looks like they dropped down and they just pretty much remained flat even all the way till 2022. So we're looking at least about a year and a half, guesstimating. So way over a year, where the stock has remained pretty much flat, all the way until July 2022, and then in July, that's when it started to drop even more. So it doesn't seem like a big drop from $7 to $2, but percentage wise, that's a pretty big drop because you're going into the negative. So as we can see here, let's go back to July. So again, they went from about 6.7, and then as of right now, the stock is at $2. So yeah, they lost like close to 200% of their stock if you want to look at it that way. Because if you cut 6 in half, that would be 3. And if you cut 3 again in half, that would be $1.50. So they're only 50 cents away from it being down to pretty much 200% if you want to see it that way for the year. So again, the exact date for the split date was the same time they paid the dividend. It's rare to see stuff like that, but I guess they wanted to cash out and do away with what they can. So again, special dividend of 13 cents, and the dividend yield for that was actually 39%. So if you would have bought this stock, even 2 shares, you pretty much would have earned, or 3 shares exactly, you would have earned your money back with 3 shares. So overall, the stock, obviously, it's not that good. I don't think nobody would care for it. Certainly not me, but I'm sure other daredevils like cheap stocks like that and then just waiting for a rebound. I don't see any rebound. I think there's other stocks better than that if you're looking for a rebound. So next stock up is CCAP. So CCAP, I like this trend. You can obviously see the uptrend, really, really nice. They have a 52-week low versus the 52-week high. That's a nice little difference. It still needs a little bit more work, even though we are in a downtrend, but it could still use a little bit of work. Dividend yield is very attractive for a lot of people. I know people like that. Market cap is pretty decent. Could use a little bit more. But overall, the stock, I think they're paying too much in dividend. They need to earn a little more. Hopefully, they can do away with that for next year, because this year so far has been a very rough year. This company is in the closed-end funds. So we're going to look at the chart real quick for a 1 year. If you look at the 1 year, they pretty much dropped from December from their highs. Actually, November from their highs. And then in July, they went down pretty hard. And then now they're going up again. But again, they're starting to do a small little flat line. So we'll see where that ends. But again, the last 3 months have been pretty good. Look at the 5 year from 2020, and that definitely looks like it went up for a few months, and now it just looks like it's flat. So 2022 has been a very rough year, tough year, a downtrending year for a lot of stocks. So hopefully this company can, stay afloat and continue their success. As you can see, they've been paying a yearly special dividend, and then on top of that, continuing dividends. So again, as you can see here, 2021. So 41 cents, and then you have year end of 5 cents. So then we have here 5 cents, and then a regular dividend of 41 cents. Because these were 2 payments. in one day. So they paid twice in June. So a payment of 5 cents and then a payment of 41 cents. And so far, a special dividend of 5 cents in September. So overall, I think the company's paying a little bit too much in dividends. As far as fundamentals and technicals, uh, fundamentals seem okay, but like I said, they're paying too much. I'm not gonna go too much over the financials because obviously, uh, sometimes they don't give me the proper updated version, and it's just not showing. So again, I think they're doing okay. I don't know if they need, more work to do or anything, but again, they seem like an okay company. Um, if I'd recommend this to a watch list, yes or no? Um, I don't know what I would lean. I had to look more into it, but again, I'm only here for the special dividends, so as of right now, I can't say. So again, they paid a special dividend last year, 5 cents. So I don't know if they're a consistent payer. So far they seem like it. So the next one up that I have is STRS, and they pay a special dividend of $4.67. So far, this is the highest special dividend payment of the five companies that we're reviewing so far. So $241 million market cap. The difference of a 52-week high and a 52-week low is $40 versus 25. So that's a difference of 15. PE ratio is at 4. That's pretty low. So very undervalued. We're gonna see and dive a little bit. So looks like they were uptrend and now it looks like they're starting to flatline. Past year went up, then went down big from $40 all the way down to pretty much 30. To flatline it around 30, between a range of 30 and 27. So we're gonna look at the special dividend payment real quick and the history real quick. So as we can see here, they started to pay in 2017 and that was it. And they paid special dividend. That was the last time they paid. So this year they paid $4.67. They had a split in 2001. So that was a long time ago. So that was pretty good. They don't make frequent splits, so that's definitely a good sign. Earnings per share is at 7, so positive earnings. They're on the real estate rental development and operations. Uh, Decent sector. I mean, they still have work to do based on the market cap, but their share price ranges through the years seem okay. Housing is pretty tricky right now, so if I were to say yes or no, I would say no as of right now for this stock. Again, it's not a consistent payer at all. They just happen to pay $4 and change. And again, you're looking at a 5-year gap of payment. So even if you did buy a share and get the $4.67, you average that out since the last time they paid. So you average $4.67 divided by 5 years, and that would be your average. I'm not gonna do the math, but you're looking at least less than a dollar, which is not bad. But again, this company would have been a guesstimate. You would have to guess to get this company right and to actually wait to get the special dividend. So I mean that's still tricky, and that's a long time waiting to get a payment. So again, I'm not too crazy about the company. I don't like it. It's just that it happens to be a special dividend payer. Last company that I have is CVI. So CVI Energy. I think I had this one on the list before. Going on an uptrend, went flat for a little bit in July, then went up. Then it's starting to go really hard on a downtrend now. See that long leg there? So it looks like it's on a downtrend. we're gonna look at the last 5 years. It didn't go up much. Well, it broke out from its highs in 2021, so it's been going up and down. So in order for it to break out, it did break out for April, but again, it's been short-lived. So we're looking from April, then all the way down now in September. So you only had let me see, a 5 month momentum run, and that was pretty much it. Stock is pretty active though. It's really nice. 52-week high and low of 43 versus 11. That's a big differential. So that's pretty nice. Stock seems undervalued. So again, I like this company. Payout ratio is fair. It looks like it's about 1/3 of it. So that's not bad. And we're looking at the dividend history. So they are rising dividends as well as special dividends. So either way, you do get paid if you did invest in this company. It looks like they paid quarterly, except in 2020. 2020 was rough. They made a dividend cut for May of that year in 2020, but again, they continued it in 2021. Yes, it was only one payment, but they did a one lump sum. So that was even more than enough to cover quarterly dividends for a whole year. So that definitely was a nice special dividend payment. And then we also have regular dividends getting thrown in there for this year. And so far, only 2 dividend payments, but the special dividend payment actually increased, and that still made for a nice payment. So as we can see here, yes, only 3 payments, but we had 2 payments already that have been pretty strong, and then the first payment in May, which is pretty nice as well. So far we're looking at about $3.40 for the year for this stock. So it's not bad. I'd say yes to the watch list. So this company is in the oil and gas refining and marketing. So this company is a $2.87 billion company, close to a $3 billion company. Pretty active on the stock market, undervalued. Right? It looks good. Looks like a good stock. So that's about it. That's what I have for you guys. So again, I believe all these companies are a no. I didn't look into some of them. That is why I'm saying no. Just by looking at this one seems decent. So yeah, CBI seems pretty good, and oil is a pretty good stock for this year anyway, as to what's been going on for this year. So that's it. That's all I have for you guys. Thank you guys for watching. If you like what you see, like and subscribe. If not, I hope I can continue to bring you valuable information or something that you can enjoy or you can like. So please be aware for my upcoming videos. I have other sectors and industries to go over. Hopefully I can provide you that you know uh, valuable information that you are seeking. So again, please continue to watch. If you don't, then stay tuned. So again, have a good night, and thank you guys for watching.